Vietnam has one of the fastest growing digital economies in Southeast Asia. Young people here use QR codes for everything from their morning coffee to their late night street food. Yet, an estimated 13 billion US dollars are stashed outside the formal banking system. That's billions of dollars in life savings, not in high interest accounts or stock portfolios, but in cash, tucked inside biscuit tins or converted into slivers of gold and hidden under floorboards. In a country so forward-looking, why do so many people trust the space under their mattress more than they trust a bank? The answer isn't simple, and it has nothing to do with being old-fashioned.
Imagine this. You want to buy a brand new motorbike, the key to freedom in any Vietnamese city. You don't apply for a loan. You walk into the dealership with a backpack full of cash, millions and millions of Vietnamese dong, bundled in thick stacks. This isn't a weird, exceptional event. It's normal. Here, cash is king, queen, and the entire royal court. From a 5,000 dong sugarcane juice on the corner to a 50 million dong rental deposit, physical money is the default. It's immediate. It's final. There are no processing fees, no pending transactions, no awkward moments when the card machine fails. It's a world of tangible transactions you can feel in your hand. This preference for physical money creates a constant flowing river of cash that lubricates the entire economy. But this is about more than just convenience. It's about a deep cultural instinct. And to understand it, you have to look at what happens when that river suddenly runs dry.
For your parents' or grandparents' generation in Vietnam, the bank isn't a symbol of security, it's a symbol of loss. Imagine living through decades of war, where the government in charge of your money could disappear overnight. Then, after the country unified, came the economic reforms and periods of staggering hyperinflation in the late 1980s. People who had dutifully saved their money in the bank watched in horror as their entire life's work and nest egg for their children evaporated into worthless paper. A fortune one day was barely enough for a bowl of pho the next. These aren't abstract stories from a history book. They are painful, lived experiences. This history is burned into the collective memory. It taught an entire generation a brutal lesson. The only wealth you truly own is the wealth you can physically hold. So if paper money could become worthless overnight, what could you possibly trust? The answer was heavy, yellow, and timeless.
The real bank for many Vietnamese families isn't a building with a logo. It's the local gold shop. You'll see them everywhere, wedged between pharmacies and noodle stalls, their windows glittering. This is where real savings happen. People don't buy gold for decoration. They buy it as a stable, reliable form of currency. Every month, after paying the bills, a family might take their leftover cash and buy a chi vong, a tiny, standardized unit of gold, about 3.75 grams. These little slivers of wealth are then tucked away in a safe place at home. Gold is the ultimate insurance policy. It's anonymous, it's portable, and it holds its value against the dong's inflation. It's the silent, trusted asset that pays for a wedding, secures a down payment on a house, or acts as an emergency fund. This physical, tangible asset feels infinitely more real and secure than a number on a computer screen. But surely this is just for the older generation. The young, tech-savvy Vietnamese must be different, right?
Here's the thing we often get wrong. It's easy to look at this and call it distrust of banks, but that's not the full picture. It's better to see it as a highly sophisticated personal risk management strategy. It's a portfolio. Think about it. Many Vietnamese people do have bank accounts. They get their salaries paid into them, they use apps for online shopping and paying utility bills. They are participating in the modern financial world, but they don't put all their eggs in that one basket. The bank is for cash flow, for daily life. Their actual wealth, their long-term savings, is intentionally diversified. A portion is in cash for immediate liquidity. Another portion is in gold as a hedge against inflation. Another might be in a plot of land, or even an informal loan to a trusted relative. It's a resilient system built on the assumption that any single institution can fail. The goal isn't to reject the bank, but to build a personal safety net that is stronger than any one bank.
Let me tell you a quick story about my friend's aunt in Da Nang. We'll call her Auntie Nga. She runs a small shop selling household goods. One afternoon, her son, who was working on a construction site, had a serious accident and needed immediate surgery. The hospital was clear. They required a deposit of 80 million dong, about $3,500 upfront, in cash. There was no time to wait for a bank transfer to clear over the weekend, no option to negotiate a payment plan. Auntie Na didn't panic. She closed her shop, went to her bedroom, and pulled out an old tea tin from the back of her wardrobe. Inside was a mix of neatly bundled cash and several small fabric pouches heavy with gold pieces. She took what she needed, went straight to the nearest gold shop to convert a few pieces, and was back at the hospital paying the bill in under 2 hours. That is the kind of security this system provides. It's instant, it's liquid, and it works when you need it most.
This system of keeping wealth close isn't just about individual security. It's woven into the very fabric of the community. In Vietnam, there's a concept called Hui. It's an informal lending circle, a kind of microcredit union run by friends, relatives, or neighbors. Each month, every member contributes an agreed-upon amount of cash into a central pot. Then, one member takes the entire pot, either by lottery or by bidding. It's a way to finance a big purchase, a new motorbike, a home repair, without ever stepping foot in a bank. The entire system runs on one thing: reputation and mutual trust. Your credit score is your character. This social banking reinforces the idea that your ultimate safety net isn't a financial institution, but the people around you. The trust is placed in relationships you've built over a lifetime, not in a faceless corporation. It's a world where your financial health and your social standing are one and the same.
So, when you see a Vietnamese person paying for something huge with a giant stack of cash, don't see it as backwards. See it for what it is: a rational choice rooted in a history of instability. It's a belief that true wealth is tangible, something you can touch and hold. It's a reminder that in a world that can be unpredictable, the most reliable insurance policy is a combination of gold you can hide, cash you can spend, and a community that has your back. The safest vault is the one you build yourself. If this gave you a new perspective on Vietnam, consider subscribing for more stories from the inside.